Welcome back. Inventory Management Part 2, which is going to be dedicated for discussing the inventory transaction. Now, in this video, we are going to talk all the transaction which comes within the inventory, like inside the inventory, management. So let's start. As we always do, when we went to search in the Google, like what are the inventory transactions, what Google tells, an inventory transaction is an activity that affects the quantity of part in a stock area or location, such as issuing part, receiving shipment, assembly part kit, and transferring between the stock area. Now, if you are not a supply chain or inventory professional, it's very difficult to understand what actually Google is telling. Like, this is inventory definite transaction definition, but for non-inventory professional, or suppose if you are coming from IT background and you are trying to develop an inventory management system, then it's very difficult to understand really what is the transaction. So, to define in a simplest way, what we have done, we created inventory transactions and then we will define one by one. Like the transaction affects the inventory value are followings, like opening a stock, sales a stock, receipt, a stock transfer out, a stock transfer in, and stock adjustment. These are the standard transaction which affects the inventory. Now, there are two other transactions also, which is the stock reserve and the closing stock. Like there will be many more other transactions, but on the higher level. So we are just covering right now the basic understanding. So let's stick with this. The first one is opening a stock. Opening a stock is simply when you start a shop. Okay, you brought something to sell, so that the item which you brought on the first time need to be treated as a opening stock. Now this is the condition when you have started new, but when your year finishes and you do the year in inventory, whatever your closing stock is will become a next year opening stock. This has opening a stock has a basic uses when you take this value and register in the financial book. So in the final accounting financial accounting, opening a stock is entered in a starting of financial period. Last year closing a stock become opening a stock for next year, like it will become a next year opening stock. Now, this is a very long process. So, generally, all ERPs like SAP, Microsoft Dynamics, Focus, Zoho, Odoo, Tally, Sage, the all transactions in the inventory model they provide the import functions. And why we are mentioning this, because you don't need to do the data entry. You just create an Excel file and you just attach it, but conditionally you have a proper item code, so it will get import. Second transaction, which is a sales, like every day you are going buying something. So whenever you are buying something from shop, that shop is affecting the inventory. Now, how the sales issue transaction affects inventory? Sales or issue, like issue, why we are talking, like suppose if you have a project, the project you are not selling the item, you are issuing the item. So either in the sales or issue, sales on a stock issue creates a negative effect within the inventory. Means negative effect means is going to decrease the stock. So let's take example: a computer shop has a Inspiron 157501 laptop, 5 pieces in stock, and then they made one piece of sales. So how the inventory will get affected? As here it's visible, like inventory formula and effects, stock in hand is 5, sales quantity is 1. So stock in hand minus 1 become your balance stock. There are some important facts are there when you are doing the sales transaction. Like sales transaction must have a valid date. Sales transaction must have a warehouse transaction. Like they must have a warehouse selection. Means when you are doing a sales and you have a multiple warehouse or single warehouse, then you must select the warehouse where the inventory will get decreased. Like the item can only be sold or issued when you have a stock in hand. Like item quantity should always greater than zero. item quantity must have a greater than zero price. And the most important, the item must have a unit definition. Now the second transaction is material receipt. How the metal receipt transaction affect the inventory? Receipt create a positive effect in the inventory. When you say positive, it means a plus side. Like take example, computer shop has a Spyron 157501 laptop 5% in stock, and then they make one piece of receipt. So how a inventory will get affected? If you see here, as per the data, stock in hand is 5, and then receipt quantity 1, so your closing stock become 1. That's why we are telling is a positive effects. Important facts are same. Your receipt transaction should have a valid date. It should have a warehouse selection where the stock is going to increase. Item must exist in the metal master. The quantity must be greater than zero, and the price must be greater than zero, and the unit must be defined in the transaction. The third one is a stock transfer out. How STO transaction affect the inventory? A stock transfer out created negative effect within the inventory. Now, the computer shop has a Inspiron 6 piece in stock, and then one piece is made as a STO stock transfer. How the inventory will get affected? Like a stock in hand, and then the STO quantity. So 6 is a stock in hand, and then minus 1, so it's become 5. Now the important facts are STO must have a valid date. Same stock transfer must have a from which warehouse we are taking the metal and to warehouse where the metal is going. Same, we must have a quantity greater than zero and the price value. And at the end, the unit must be selected. A stock transfer in. A stock transfer in, it creates a positive effect in the inventory. Now, example, the computer shop has Inspiron 5 pieces in stock, and they made uh, one piece of STI. How inventory will get affected? It has a positive effect, so you can see the 5 is stock in hand and 1 is STO. So the total becomes 6. Important facts: STI must have a valid date, and then from and to greater than quantity, price greater than zero, and the quantity must be selected. Now, stock adjustment. Stock adjustment has a both plus and minus effect in inventory depending on the need. SA can be used to execute the waste, breakage, shrinkage, write-off, and internal use. Like what is the wastage? Expire or obsolete item. Shrinkage, inventory loss, theft, or also called a stock loss. The breakage, damage inventory that cannot be legally sold as a new. Inventory lost for other reason, which is a write-off. Like inventory internal use, inventory item put on internal use or consumed by the company instead of being sold to the customer. So these are the basically you can say the 6 or 7 transactions which help us to understand like how the inventory transaction works within the inventory. I hope this video will give you initial understanding about stock transactions, and also to understand which transactions create a positive effect and which transaction create negative effect. So we'll request you to write in the comment if this video helped you to understand the inventory transaction. Thank you.